Are you living in Switzerland or somewhere else in Europe and you're not sure which ETF you should choose? In this video, I'll give you a simple step-by-step guide to choose the right ETFs so that your saving can grow into a strong retirement portfolio. You will learn what to check, fees, font size, how the ETF pays you back, and more. I'll also show you the common mistakes beginners make and how to avoid them. By the end, you will feel ready to choose ETFs on your own. So let's jump in. Hi, I'm Aysha Paer. I'm a cross-border investment specialist in Zurich, Switzerland, with 20 years in finance and a background that spans New York, Dubai, Amsterdam, Munich, and the UK. On this channel, I cover financial questions that matter most to high-earning expats and anyone managing their finances across borders. If you're here, you probably already know what an ETF is, and you might have already tried to find your way in the sea of ETFs available out there, only to realize that this is not as straightforward as you thought and that you might need some help. And just to clarify, in case it's needed, an ETF is some kind of fund that contains a list of stocks. There could be hundreds or even a few thousands of stocks inside an ETF, and owning one share of an ETF gives you tiny slices of everything that's inside. You can buy and sell ETFs on stock market all day at changing prices, just like an Apple stock or Tesla stock, using a trading platform or through a third party like a robo-advisor. Most ETFs simply track an index, which is basically a predetermined list of companies or bonds or commodities, and the most famous one is the S&P 500, which represents the 500 largest US companies quoted on the stock market. And so because the index has a predetermined list of companies included, all proportionally to their size, an ETF portfolio can be automatically managed, which greatly reduces the cost of managing the ETF, usually called the expense ratio or the fees if you like, and lowering the fees of investing is probably the single most important way to dramatically increase portfolio growth over time. And the best place to find and select ETFs is a website called JustETF.com. JustETF contains all the ETFs available to European investors, including those residing in Switzerland. Let me walk you through it so that you can see exactly how to review and select ETFs. So here we are on JustETF.com, and the first thing you want to do is go here to the avatar and click the settings here. You want to choose the country where you live and where you're a tax resident, at least at the moment when you want to start investing in ETFs. You choose the language, and then you make sure you're a private investor here. You can save that, and then you can head straight to the ETF Screener over here, and that's where we're going to be able to search for and select ETFs. You see on the left you have a menu here with different types of investments and for different types of ETFs, and for this exercise we're going to look at equity, which has the most ETFs, and equity essentially means shares in companies. So if we drill down here, we see we have different ways we can further filter. We can filter by region of the world. We can look at specific countries. And here when we say countries, we are actually talking about countries where the underlying investment companies are located and not the country where you are based. You can also select by sector. There are ETFs that specialize on specific sectors. You have equity strategies. So for example, you could have an ETF that has a strategy of paying high dividends, or you can have small cap, for example, it's an ETF that only focuses on smaller companies, or you could have here social environmental if you want a sustainability filter. And then there are ETFs that follow indexes that are built around specific themes like cybersecurity, climate change, blockchain, biotech, aging of the population, etc. Now, even if it kind of sounds appealing and kind of makes sense to invest in specific sectors and specific strategies, usually the best investment strategies or the best portfolios are those that are also the simplest. And to achieve that, it's best to stick to large ETFs. For example, one of the most well-known index, which has a lot of ETFs tracking it or replicating it, is the S&P 500. And so you could come here and look at the United States. You can also search it here, S&P 500, which includes the 500 largest companies in the US. And we see that we have actually 80 different ETFs available to us for the S&P 500. And the first thing you want to do to be able to choose which one you should pick is to sort them by the total expense ratio here, which is essentially the fees that they charge for the ETFs. And the reason you want to do that is that, as I mentioned before, having low fees for your investments is the single most important thing you need to look at to make sure your portfolio is growing as it should. And we see here we have 4 of them that have the lowest total expense ratio at 0.03%. This is very low. In general, you want to stay below 0.20%, which is definitely the case here. One thing that we can look at are the names. So we see that they have the names. These have very similar names. So once we've looked at the fee, let's consider first these 4 cheapest ones. We look at the font size, and we see that here we have the 3 first ones are considerably larger than the 4th one. So let's drop the 4th one for now, and we can focus on the 3 largest ones. Then we can move to the performance, although it's tempting to look at the 1-year performance that you see here, but when it comes to ETFs, it's not really the best way to select ETFs. It's much more important to look at what kind of ETF you want, what is the fee, and is it large enough. And here, nonetheless, we see that there is a difference with the first one. It's half the performance of the other 2. If we come back to the name here to get a little bit of a clue of what's happening, we see that the first one has the words leaders in it, and leaders essentially means that the ETF is not including the full 500 companies. It only selected those that qualify as leaders. So in general, simplest is best. So if it were me, I would stick to a regular ETF, which includes the 500 companies included in the S&P 500. There are a couple of other things that we can look at. We can look at the distribution, which concerns the dividends that the ETFs is generating. Accumulating means that instead of being paid out to you, they are automatically reinvested in the ETF, and distributing here is when they are paid out directly to your trading account. Here, replication is also something important. It concerns the way the ETF is replicating or tracking the index. So full replication means basically that in this case, it includes the stocks of the 500 largest companies listed in the stock market in the US and that are part of the S&P 500. Swap-based unfunded means that rather than investing in the stocks themselves, the ETF enters in various contracts that provide exposure to these stocks rather than owning them. And there are people who really like that because there are certain situations, some tax savings. Now, if you like that, you need to keep in mind that when you invest this way, you actually are not owning the underlying stocks, and instead you rely on some kind of like contract-based wishy-washy special sauce, and this is definitely not the way I like to invest. Now we can open one of them to see more details, and we see we have the description, we have some documentation here. The fact sheet is more of a marketing document that you can download. The key ID is the equivalent, but with more legal language. Here we see an example of a fact sheet, and here we see the key information document, which is more of a legal document. If we jump back, we see here the performance. Again, looking at the performance is not really relevant. You can also compare that ETF to another one. Now, when it comes to the performance, it doesn't really make sense if you're looking for the S&P, for an ETF that tracks the S&P 500. But let's say you still wanted to do that. Take this one, for example, and we see in this case, the performance is pretty much the same. We don't see the difference, and that's because they are both investing in the S&P 500. So essentially their performance is similar. We can also open here detailed comparison, and that's quite handy. We can look at the information, and we see that in terms of the font size, the second one is considerably larger, which in general is positive. It's better. Now we see that the total expense ratio of the first one is lower. And again, this is really a key criteria. And from the moment we have 100 million in font size and we are well above that with the first one, then the fees is really the most important criteria when choosing between 2 or more ETFs. And so we see they are very similar. similar. They both have currency unhedged. They are both accumulating. Another aspect that's of interest is the fund domicile. Ireland is a great domicile for European investors for a number of reasons. And if you're an investor based in Switzerland, you might also be able to invest in ETFs that are domiciled in the US, if you know where and how to go about it. Now, there are pros and cons, especially from a tax point of view, of investing in ETFs that are domiciled in the US. This is a much more complicated subject. And so if you want more information about that, then I would highly encourage you to check my investment and implementation program about investing. You will find more information about it in the description below. All right, so if we scroll further, we see holdings, we see the top 10 holdings, the top 10 companies. Obviously, they are the same because ETFs are very comparable. We see the sectors and the performance. Again, the performance, you can have a look if you wish, but it's not so relevant. And we can see another thing that's of interest is on which stock exchange the ETF is traded, and this will be helpful when you want to place transactions on a trading platform. There are a few more things that you should know when investing in ETFs so that you can be confident you're making the right choices. These include the tax impact, especially if you plan to move abroad at some point. And before you start selecting ETFs, you need to determine a portfolio strategy in terms of the percentages you want to allocate to stocks, bonds, gold, real estate, and even crypto. You also need to determine the right region and country exposure that you want for your portfolio, among other things. And if you want more tips, you can always subscribe to this channel. I plan to create many more videos like this about the financial challenges that high-earning expats and those otherwise living in a multi-country situation face. Thank you so much for watching, and see you in the next one.